Good morning, traders and investors around the world, and welcome to Wednesday's edition of PremarketInfo.com, where we prepare you for the most important hour of the day, the first hour. Good morning to you, Dennis. S&P's trading above unchanged here, up 3.25 points.
Well, on today's show, we'll talk about the S&P. Obviously, we took out key support there yesterday. We're bouncing back a little bit here today, but also a little disturbing. In a survey of 500 Wall Street executives, 24% said they may need to engage in unethical or illegal conduct to be successful. That is a scary thought. And the New York Post reports that A&F will launch a massive stock buyback.
Okay, taking a look at the S&P, we did take out that Monday's low, 1341 yesterday, and vavoom, we broke down to 1330.50. That is our first target on the downside if we go into reverse today. What I want traders to point out here, we did come back up to that area, though, in the overnight session. 1342.50 was the high in the Globex session. That coincides with Monday's low, 1341. Critical area for this market to get back above and hold. If in fact it cannot, Dennis, we are breaking below through 1330.50, and after that I have no support until 1316.
Yeah, we need to hold here. I actually just drew a couple of lines here. You've got this channel. This is the last couple of months of trade on the S&P, and it's definitely trading in a channel. We got to the bottom of it down there in the 1250 in early June, bouncing all the way up to 1350 and down again and up again, as you can see on the channel here. We're right at the bottom end of this channel right now. This whole 1330 area needs to hold. If we take out yesterday's low, what was yesterday's low there again, Joel?
1330.50.
If we take that out, we are definitely below this channel. I think we could eventually see 1300 again. We need to hold this. We need to hold this bottom of the channel to keep the trend intact. If not, we could be in trouble. So, like you said, Joe, I'd like to see it get back up that 1341, 1342 area, which was critical support. It took that out, so that could give you a little resistance off the hop. If we can get back up there, then we can say this trend is still intact, but it doesn't look that pretty for the bulls.
It feels heavy, doesn't it?
It does.
I mean, taking that area out, and then you just got a little bit of a bounce in the pre-market. The people went home short are not, really getting the screws put to them on the open. So let's keep an eye. 1341, that's the number for the day.
A little disturbing there was reported there by Reuters yesterday. In a survey of 500 Wall Street executives, 24% said they believe that they need to engage in unethical or illegal conduct to be successful. This is just a scary thought that 1 in 4 people think that everybody else is kind of doing gray, sketchy things, so we need to do it too, or they're going to get one step up on us. What's your take on that?
I just think that it is a scary thought, and I mean, the guys that are admitting it in the survey are stupid, is what the first thing I have to say.
You're supposed to say no to that survey question, not yes to that survey
yeah.
question. Well, maybe 1/4 of those guys are honest.
I mean, you hear,
and the other three quarters aren't honest because they're all doing bad things.
Yeah. A bad survey in and of itself. I mean, you hear horror stories all the time about people going in with investment advisors or brokers, and I mean, you just hear these stories all the time, and I just think it emphasizes the importance of it. If you're an individual investor and you have money in the market, you got to do your own homework, your own education. I mean, a lot of people will charge you an arm and a leg for a course, and not have not give you anything substantial, but I think you got to rely on yourself.
Yeah, I just tell you a little story here. Do you got time for a quick story? A friend of my parents, hurting for he's 65 years old, hasn't quite saved enough money, and goes into his bank saying he'd like to be able to get $1,000 extra a month, just looking as a way to try to pick up money. Well, they advise him, he doesn't have that many investments, but he owned his house free and clear, paid off mortgage. They advised him to take the money out of his house, take equity out of his house, and put it into the stock market. And at 65 years old, and he was uneasy on this, and he's like, well, I don't know, I don't know anything about stocks, I'm not really comfortable with that. So first off, 65 years old, you're not comfortable with it. And then they say to him, "Oh, don't worry. Other people, have done this and they're all doing very, very well with this. Don't worry. We put you in stable stocks. It'll be fine." And then they come in and they actually, he was still uneasy. They come in and they bring in a statement. He says this to me. They
This
bring
is
in
a true story.
it's just supposedly exactly what he said, because this was a friend of my parents. I won't say who the person was, but brings in a statement from somebody else that had just done this, puts their hand, the investment advisor puts their thumb over the customer's name and says, "Look at what they did last year. They made 15% doing this last year. You've got to do this too." How many things did that just break? First of all, know your client. He's saying I'm uncomfortable with it. That means it's not a comfortable strategy for him. Second thing, you can't show other people's statements, put your thumb over the name, and then it's almost like guaranteeing performance. I mean, that is just a horror story, and it just reminded me, this survey reminded me, is this the kind of stuff that goes on behind the scenes? Because that is just breaking so many rules there. That makes me sick when I hear stuff like that.
Yeah, it is. And, also on top of it, I'm sure they were charging them probably exorbitant fees on
That's
that.
another thing too. Yeah, thanks for reminding me. I remember I was telling you the story a couple months ago too, so you remember. But yeah, exactly. So and then the fees involved. So they took the money out of the home, charged 4% to borrow the money. So the bank's making 4 right there. Another 1% of mutual fund management fees. So there's 5% of fees before he breaks even. So the market's got to go up 5% before he breaks even. That's insane. Imagine the market maybe if it does 7 or 8%, maybe you pick up 3%, but if it goes down 5%, you lose 10%. That's just a terrible strategy. I'm not a fan of borrowing to invest ever. And at 65 years old, I think it's a terrible idea. I know a lot of people, it's one thing to borrow to trade, to have margin is fine, but borrowing just to put it in mutual funds, I think that's a terrible idea. That was something that was very popular 10 years ago when the market kept going up, up, up. The last 12 years, the market's gone nowhere, and if you were doing that strategy, you were significantly underwater.
Well, what was the timing? When did this investor get in the market?
2 years ago, I think this happened.
So he should have done pretty good.
He
The
should have done
market
pretty
said,
good. And I said, "Well, how are you doing?" He's up like $1,000 on a $200,000 investment, up next to nothing. And so the market's actually performed well, but that 5% fees, the 4% for the interest rate and the 1% for the management fee, just eats away the returns. Terrible, terrible, terrible investment advice right there. And people should be fired for stuff like that. And if that's the stuff that's going on behind the scenes, then I think this 24%, I think it was exactly that. There's 24%, 1 in 4 people were honest in that survey. Maybe there's even more people doing unethical stuff behind the scenes. Terrible.
I have some advice for your parents, friend.
What's that?
Listen to Premarket.
Listen to the pre-market info. Yeah, just don't. If you're older, you don't understand the stock market, don't borrow to invest. Don't trust. You've got to have a little bit of, just don't borrow to invest. That's my bottom line here. It's just not a good idea. Borrowing to trade is one thing. You're sitting here, you're managing your own money. Borrowing to invest in a mutual fund, terrible idea.
Okay. What stocks do
That's
we
my
have
rant
moving
for the
to-
day. My daily
Okay.
rant. We do have a couple stocks in the news. Abercrombie and Fitch's New York Post reporting here that they are going to launch a massive stock buyback. Didn't say the size of the buyback, but did say that they're going to be launching a massive buyback. Stock is trading up significantly in the pre-market, 34.40 right now after closing 32.77, so it's getting a lift. This $35 number kind of jumps out at me. At 2-3 days ago, we were topping out there, so maybe that's your first area of resistance.
Well, if looking at their chart, they better start buying their stock because nobody else is. We have come down off a cliff here from $54 area, made a low in June at 29.51. Getting a little bit of a bounce. I have to concur with you here on this $35 level. You had a high at 35.14 on the 3rd of July. That's a big area. Unfortunately, this news has not even been able to get it up to that level. 34.64 has been the high in the pre-market. I'm not a big fan of these buybacks. It's not exactly like they send an order for all the stock on the open to buy it. So keep an eye on 34.64, the pre-market high. Also, if it gets anywhere near back that 35 level, I'd look for some huge offers in Abercrombie & Fitch. Have you ever bought anything there?
Abercrombie and Fitch. My wife has. I don't know. Maybe I do because, like I said, I'm not a big fan of doing shopping. My wife sometimes buys my clothes for me too. She dresses me, so maybe I'm wearing Abercrombie and Fitch right now for all I know. But no, I don't think I'm a big purchaser of Abercrombie and Fitch products. So, but what I did want to say just on the buybacks, just taking that a step further, there's been a lot of stock buybacks here over the course of the last 6 months, but the equities really haven't gone anywhere. Like it seems like once a week at least we're talking about a buyback. And how have these stocks, are they really coming back? And like you said, are they rallying with these buybacks, or are they just kind of staying flat here?
I think they always get an initial pop. I
Right.
mean, the bulls use it to bid up their stock, but I think if you're going to follow that, if investors, is something that you want to follow, take the close today and see where it closes, and then over the next couple of weeks. I mean, because that there's going to be some support in the market here. A lot of times, my theory is these companies are doing that when they think that there's another big sell-off coming in the stock, and they're going to be in there supporting it.
Right. Do have some other news here. Gold Corp cutting their production outlook. Stock is trading down significantly, actually. I was looking at it about an hour ago. It was only at 35.50. It's at 34.50 now. 34.56. This stock is getting taken out behind the woodshed on this production outlook cut here. Where is the stock heading? We had a low back in May 23rd at 34.45. That's where we're looking at right now. Below that, it could get even uglier.
Yeah, this is we talk a lot about the formations and the pre-market and the charts and stuff, and this one is just a steady drop. It is trading at 34.56. Is it offered there or is it bid there?
34.56 to 34.69. So it's bid there, but it's trading
Okay.
there. So the offer's way down there too. Trade 70,000 shares here, so this trade a lot of stock too.
Yep, I would have to keep an eye on that low that we had going back that you just identified on May 23rd, 34.45. That's a huge level. If in fact it can't get a bounce off there, get a little recovery rally, we will be slipping under $34.
That would not be pretty. NEM, you wanted to highlight a couple stocks. We might as well talk about a bunch of these gold stocks. And I know NEM, you were looking at a potential triple bottom, Joel.
Yeah, we had a low yesterday at 46.31. You had a low at June 28th at 46.41. And then also that coincides
Right.
with the low going back a little bit farther at 46.60. But, just to digress a little bit, you're looking at those areas as support, kind of that's why I was leaning, even though I had talked about IBM going down, I was looking at that 187 as a stop out point. This thing is in trouble if it takes out that 46.60 level.
That's the one thing, and this is what a lot of people fail. A lot of novice traders too don't look at support. Support can be used in two ways. It can be used, okay, I'm going to place a buy order there, and maybe it bounces off that support level. But you can also say when it takes out that key support level, that I'm going to trade it through that key support. And if it starts trading, 10, 15, 20 cents through there, I'm going to put a short on because there's not a heck of a lot below that. Just exactly that. We could look at that IBM trade that you just mentioned there from yesterday. We spoke about this 187 level. The stock was actually trading up there. Yesterday's chart, if we didn't get removed, it was like 188 or 189 is where it was. It opened up fairly high IBM and then just continued to die throughout the day. Took out the key support at 187. But when stocks take out key support and there's not much below, they can really get some wicked sell-offs. And sometimes the better way to trade them is to trade them from the short side as they're taking out support.
And also, just we also talk about gaps in the market. Sure looks like IBM wants to go back and fill that gap for the beginning of the year, January 19th. You had on the 19th, you had a 182.36 high, and the next day you had a 184.75 low. Boy, this stock has just been under pressure.
Yeah, IBM has not been in favor. I'm not sure really what's happening here. And did they announce a buyback? I'm trying to remember. I know
Yeah,
they.
they did. They
Yeah.
did.
So here's
Billy.
another example of a stock that I believe they did a while back, and then the stock is sitting here, making a new 5-month low here. Trend is not your friend in this issue. We've spoke about it, the last few days, saying I don't know what's happening here, but it is breaking down, continues to break down. I think any type of a bounce is going to be met with more sellers here again. I know we're up only up 2 points now in the S&P, but I think if you find a bounce, any type of bounce since 188, 189, you're going to find sellers up there. So stick with stocks. The way I like to trade, I like to go with the overall flow. Look at a 2 or 3 month chart. Get a feel for which stocks are stronger, which stocks are weaker. And IBM is definitely, I'm identifying it as one of the more weaker issues.
Okay. Apple yesterday sniffed that 620 level, and then sellers came into the
Well,
market.
I would give you some props there for yesterday's show. You said that 618 to 620 area. You were highlighting a couple of tops there back from, just trying to grab the 618. When was that top? Oh, 618 on
April.
and April
April.
25th, and then before that you highlighted 620 and a quarter April 18th. I mean, right there it topped out yesterday at 619.87. So right around that area where you were talking about, hit that level and boom, just started selling off with the overall market, consolidated a bit around 615, and then had a terrible afternoon, selling off another $10, bouncing off the 605 area before closing up or moving back up to 608 to close at 608.21. Is down a little bit here in the pre-market. This thing obviously needs to hold 600. We've talked about it before. It might test it again today. Needs to hold that to keep that bull chart intact.
Uh, looking at this, look at this chart, and also we have earnings coming up in not too long. I think it's a week or so on Apple. And the area that I picked out just for traders to get a feel what I was looking at, 620 and a quarter was a high that you had on April 18th. Now that was before earnings, when everyone was upgrading the stock and whatnot, and we had that vicious sell-off right before earnings. Then the earnings came out good. We popped up again. We couldn't get to that level, but we got to 618. Before then, we had the big sell-off.
Yeah.
Now you kind of have a similar formation here, where there's a very good a very good chance that it could sell off ahead of earnings,
Yeah.
and then wait and see what happens. It could be deja vu all over again.
I mean, that did happen. That's a good point where you had a run up a little bit, 2 or 3 weeks prior, and then the week before, the stock did sell off before the last earnings report, and obviously had a bad day yesterday. So keep that in mind. Takes out that 600 could be a little bit scary. I think the earnings are, is it on the, I'm just trying to grab the
20 something.
23, I think it is.
Yeah,
Anyway, so
yeah.
you got a little bit of time here. Yeah, 8 days or so, 8 trading days before the earnings report. But I mean, the relative strength on this is not great this morning. It's down $1.50, and the S&P is up $1.50. So there's some people selling this stock. Let's just quickly talk about Google too, because there's another one. It often does follow Apple, but it really hasn't in the last run. Google got up, touched $600, which was key resistance 4 sessions ago, and peeled back off of that. Where when Apple touched $600, it kept going. So you've had a little bit of a divergence here for the last few trading sessions, where Google hasn't participated in the Apple rally. Obviously, yesterday Apple selling off. But what's your take here on the Google? It's right there, that 580 area, which might provide some support.
It's like right in the middle, not quite in the middle. I mean, first I'd like to take a look. It did give you a chance here to get long if you were looking at traded under 560. Hasn't traded below 560 very much. Made that low at 566, 556.52, and then popped up to 600. I mean, this chart just kind of feels like the S&Ps a little bit. You had that big run up,
Yeah.
and now it's starting to pull back. And
Yeah.
I just don't think you're going to see major buyers stepping in the stock again. I'd like to see it fill the gap and perhaps come down under 570 again. And plus all the folks that didn't get out in that time, that just touched 600. How about 600.06 for your nice whole number theory? So keep an eye on yesterday's low here, 578.74. We are treading above that. below that level, I'd be looking for the 570 area.
Yeah, so again, there's another level for you. When you take out these, yesterday's low and stuff, have a target in mind. That's always a good way to trade. And Joel's just giving you another target. Takes the 578. Maybe you have that 570 target in mind. Always a good idea to have an idea of where you think the stock is going. So if there's some air to trade through, then if the stock moves through that area with more ease, you can have a pretty good trade on. So always a good idea to keep in mind the previous session's lows and different reference points. We're running out of time here. The S&Ps have come down a little bit from where we were just a few minutes ago. We obviously got up there, touched that old support level 1342.50. That obviously is providing some resistance here now. We've peeled back off at 1337.50. Where are we heading?
Keep an eye on the close, 1335.50. Then the Globex low at 1333 and a quarter. Major support at yesterday's low, 1330.50. And similar, we went through that 1341 level yesterday. If in fact we do crank through 1330.50, I'm looking for a similar play. That's our show for today, folks, and we'll be back with you tomorrow.